If you spend just 5 minutes scrolling through social media, you'll hear the same sermon preached by 22-year-olds in rented Ferraris. Your job is a prison. Your boss is a warden. And if you don't quit today to start a drop-shipping empire or a crypto trading firm, you've already lost. They want you to feel ashamed of your steady paycheck. They want you to feel like you're falling behind because you aren't hustling 24/7 on a risky startup. But here's the truth they will never tell you, because it doesn't sell a $900 course or a private mastermind group. In 2026, for the average person, a stable 9 to 5 isn't a cage. It is quite literally the most powerful venture capital fund you will ever own. While the gurus are gambling on volatile trends and burning through their life savings to be their own boss, smart employees are quietly using their paychecks as a high-precision weapon to build generational wealth with zero of the entrepreneurial risk. Today, we aren't talking about quiet quitting, and we aren't talking about how to climb the corporate ladder just to get a 3% raise. We're talking about the cold, hard math of leverage. I'm going to show you why your salary is the ultimate seed capital, why your employer is actually your biggest investor, and exactly how to turn a boring job into $1 million exit. Welcome to the flip side of the rat race. The 1% want you to believe that entrepreneurship is the only path to freedom. It makes for a great movie script, but the statistics tell a much darker story. According to data from the Bureau of Labor Statistics, approximately 20% of new businesses fail during the first 2 years. 45% fail during the first 5 years. By year 10, 65% of those brave entrepreneurs are gone, usually left with no dream, no job, and a mountain of high-interest debt that will haunt them for a decade. We often hear about the college dropout who built a billion-dollar app, but we never hear about the 10,000 people who did the exact same thing and ended up bankrupt, starting over at age 40 with nothing. The real problem in our society isn't the job itself. It's our collective perception of what income represents. Most people see a paycheck as a way to pay for a lifestyle, a car lease, a mortgage, and a few weeks of vacation. I want you to change that today. I want you to see your paycheck as a guaranteed, low-volatility funding round for your personal holding company. Every 2 weeks, your lead investor, also known as your boss, drops a massive stack of cash into your account. They provide the office, the software, the legal liabilities, and they take all the market risks. You simply harvest the liquidity. Think about the leverage here. If you went to a bank today and asked to borrow $50,000 to invest in the S&P 500, the loan officer would laugh at you. But a 9 to 5 provides you with that same liquidity month after month with a 0% interest rate and no collateral required. You aren't working for a boss. You're using their entire corporate infrastructure to fund your personal freedom. Phase 1. Mastering the delta. The most important number in your life isn't your salary. It's your delta. The delta is the mathematical distance between what you earn and what you actually cost to maintain. The tragedy of the modern worker is lifestyle inflation. As the salary goes up, the house gets bigger, the car gets newer, and the delta stays at zero. This is how you stay a slave. You can earn $500,000 a year, but if your delta is zero, you are just a high-paid prisoner. You are one paycheck away from disaster. To turn your job into a wealth asset, you must treat your salary like a business revenue stream. You pay your operating expenses, your basic rent and healthy food, and every single cent left over is your investment budget. In the United States, if you can maintain a 30% delta on an average salary, the math of compounding becomes a mathematical certainty. You aren't saving money, you are allocating capital. When you stop seeing your surplus as spending money and start seeing it as soldiers sent out to bring back more prisoners, SUA vita muda. Every dollar you spend on a useless gadget is a soldier you've executed. Every dollar you invest is a soldier you've put to work to build your empire. This requires a level of discipline that most people simply don't have, which is exactly why the gurus can sell them a get-rich-quick dream instead of a get-rich-for-sure reality. Phase 2. Exploiting the hidden bonus system. The gurus never talk about the free money hidden in the corporate world because it's not sexy. But if you want to be rich, you need to love boring math. Your 9 to 5 likely offers a 401k match. This is a 100% instantaneous return on your investment. Let that sink in. There is no hedge fund on Wall Street and no real estate flip that can guarantee a 100% return the second you put your money in. If your company matches 4% and you aren't contributing, you are effectively handing your boss a 4% discount on your life. You're literally leaving your own wealth on their desk. And then there's the Health Savings Account, or HSA. This is the only triple tax-advantaged account in existence in the U.S. tax code. You get a tax deduction going in, tax-free growth, and tax-free withdrawals for medical expenses. This is the ultimate wealth stealth tool. Entrepreneurs often have to pay thousands in accounting fees to set up complex structures, while you get this elite financial vehicle for free just by checking a box at the HR office. Phase 3. Passive concentration. While the entrepreneur is distracted by payroll, marketing, and customer complaints, you have a luxury they don't: the ability to focus on passive concentration. Because your active income is covered by your job, you don't need your investments to pay your rent today. This allows you to invest with a time horizon that an entrepreneur simply cannot afford. You can take that stable cash flow and dump it into low-cost index funds, total market ETFs, or dividend aristocrats. When you buy an S&P 500 index fund, you are literally buying the labor, the genius, and the sweat of millions of other 9-to-5 workers across the globe. You are becoming a fractional owner of Apple, Amazon, Google, and Microsoft while someone else does the hard work of managing tens of thousands of employees. You are the silent partner in the global economy. Phase 4. The recession hedge. In a recession, the entrepreneur is the first to bleed. When consumer spending drops, their income can crash to zero overnight. But as a skilled, essential employee investor, your job acts as a hedge against market volatility. In fact, a recession is your greatest opportunity. While the world is panicking and the gurus are losing their shirts, you still have a paycheck coming in. You can buy the dip with absolute confidence because your survival isn't tied to the stock market's performance this month. You have the capital to be greedy when others are fearful. This is how real wealth is built. Not by timing the market perfectly, but by having an unbreakable source of capital that allows you to stay in the game when everyone else is forced out. Phase 5. The mathematical miracle of compounding. Your 9-to-5 buys you the most expensive commodity in the world: time. Wealth isn't just about the number in your bank account. It's about the lack of anxiety. The job provides the floor, so your investments can reach for the ceiling. It buys you the time for compounding to do the heavy lifting. Compounding is a backloaded miracle. It looks slow for the first 10 years, but in the final decade, it becomes a vertical line. If you start with $1,000 and add just $500 a month at a 10% return, in 30 years you have over $1 million. Most of that $1 million didn't come from your work. It came from your money's work. But your money couldn't have started working without that initial seed provided by your job. Your 9-to-5 was the catalyst for the entire reaction. Phase 6. Breaking the social stigma. We need to address the social pressure. In the current era, there is a stigma attached to being an employee. We are told that if we aren't building our own brand, we are somehow lesser. This is a lie. There is a profound dignity in being a high-level contributor who uses their income to buy back their life. Being an employee investor is a strategic choice. You are not selling your soul for a paycheck. You are renting your skills to buy your freedom. When you stop looking at your job through the lens of victimhood and start looking at it as a strategic partnership, your performance actually improves. You become more valuable because you aren't desperate. You have FU money growing in the background, which gives you the confidence to negotiate better conditions. The final shift, the exit strategy. I'm not telling you to love your job. I'm not telling you to stay there for 40 years and get a gold watch. I'm telling you to stop hating it and start using it as a financial tool. Don't quit your job because you're bored. Quit your job only when it is no longer the biggest asset in your portfolio. The moment your investment dividends and capital gains exceed your monthly cost of living, that is when the game is won. That is true freedom, not the fake, high-stress freedom of a risky startup, but the disciplined, calculated freedom of a strategic investor. You didn't need a lucky crypto moonshot or a lottery win. You just needed the most underrated tool in the entire world of finance, your 9 to 5. Success isn't about the title on your business card. It's about the autonomy of your schedule. It's about being able to walk away from any situation because you are financially bulletproof. The fastest way to become bulletproof is to stop fighting the 9 to 5 and start leveraging it. Use the system to beat the system. If you're ready to stop complaining about the rat race and start winning it by using their own rules against them, smash the like button. It tells the algorithm that this kind of logical, no-nonsense financial advice is what the world needs right now. It actually helps more than you think. And if you want the specific, step-by-step breakdown on how to allocate your first $1,000 from your next paycheck, subscribe and turn on notifications. We are building real wealth here, one paycheck at a time. The journey to $1 million doesn't start with a resignation letter. It starts with your next contribution to your brokerage account. I'll see you in the next one.